Then you get into that trade that's going to come, and you're going to hold on to it, and it's going to build up a lot of unrealized equity. That means on paper, unrealized potential. If you close a trade, you would get that, but you're not going to, because partials are stupid. That's what you've been telling yourself, and you don't want to subscribe to that. You're looking through such a small lens and not really taking in enough information. So that's the reason why I have as much data on my charts when I'm showing you my examples. I want you to understand where we are within the price run, where we are in the previous dealing range. So it helps you understand why I'm not in a rush to raise my stop loss up. I'm more concerned about watching where price is going than that of protecting the fact that I might get stopped out and have a losing trade. Now, that's number one rule always, preservation of capital, but clout and saving face publicly is the number one rule for most people on social media today. They don't want to do anything that might be viewing them outwardly from outside perspective. Other ones that we be looking at you or them could be very judgmental. And that is many more times costly and expensive and painful than that of a losing trade that you would have done in the privacy of your own, trading without making your results public. And there are lots of folks right now that are wrestling right now because they want to stand out. They want to shake their sword and stand up and rabble rouse. And they're hanging around in break even or in drawdown with only one quote unquote profitable day for the entire month so far. And they're the loudest to talk. And they'll tell you that you're not going to hear sound good advice here when I execute on the sound good advice that I teach. So when you watch a video by me, okay, consider how much information I have on the chart, because it's pertinent to you getting the higher time frame perspective. Everything that's salient, unless I'm doing like, what do you see? Like I'm zeroed in on a small little segment of a price fractal at that time. But when I'm doing a trade and I'm managing the trade, I'm allowing you to see all of the information that I believe that would be useful to you, because I teach grading price swings. You want to be able to go back and look at the dealing range that I'm operating in. And if you have a phone, or if you have your charts on your laptop or your computers, and if you have multiple monitors, if you're so zoomed in that you can only see a small little segment of price action, how can you fully trust what you're seeing on the next few candles is going to be something that is limiting your trade or putting a cap on it prematurely because you're so zoomed in? You're losing sight of something that would be a longer term objective. Now, I learned that lesson very painfully and costly, losing trades that were winners, holding on to really good trades too long because I had my charts zoomed in too tight. And over years and years and years of just saying, I got to take a step back from this, and seeing the charts better than I do now. Well, not better than I do now, but better than I did then. I see it now better because I allow for more information. And also, and I mentioned this several times in my discussions and lectures, and even on Twitter Spaces, periodically when you're in a trade, especially if you feel like you're second guessing it, like if you're in a trade, it's moved, and you just don't know for sure it's going to keep running, step away from your chart. Put your laptop maybe on a coffee table or dining room table. Take a little bit of a distance between you and it and look at it further away. Put more data on the chart and then kind of get a feel for where you are at that moment. Many times it'll give you a different perspective, and you'll see, if you understand how to read price action, you'll see that what you're fearful of, because you're so zoomed in and you're watching that 1 or 5 minute chart and it's fluctuating around a lot because it's zoomed in and it's causing your brain to pump out this adrenaline and or up to the point of releasing cortisol, which is a stressful hormone. In the last Twitter space, I talked about managing anxiety attacks and panic attacks. And when you're in trades, whether they're profitable or losing, you're pumping chemicals constantly into your bloodstream. And if you are not used to that incurred risk while trading, it can cause you to be, number one, emotional, psychologically amped up, and you're going to make something that is very insignificant paramount. It's going to be a huge thing when it isn't. I mean, think, folks. Think. No, I don't want to take any profits. That doesn't make any sense to me, to take something out and pay myself for all the time and effort and energy and attention I've placed on this engagement here. No, I don't want to do that. It's all or nothing. To me, that doesn't make any sense. That makes absolute zero sense to me. Are you going to work Monday, Tuesday, Wednesday, Thursday, and then say, okay, I got a flat tire. I can't make it to work on time. I'm tied up. Can't get to work. I got to call out on Friday. And then, hey, boss, listen, I couldn't do Friday. Just keep everything I put in. Just, let me go home with nothing. That's what trading. That's exactly what trading is without taking partials when you're given the opportunity to be paid. That's the equivalent of that. Does that make any sense? That's asinine. You are going to struggle when you first start learning how to do this. So it is advantageous for you to know where you're trying to take profits. So that way you know what it feels like. You get accustomed to doing it over and over again. And that's why I teach and I preach that when you're new, you should strive to get 5 handles. Not that that's your entire career. That's not what I've never said that, but you can make a career on that. But you have to have a target, a goal, something, because here's what you don't realize. You might have a good edge. You might have a good role. You might be dialed in and your attention to detail is keyed up. You know exactly what you're doing. And you've been consistent for a day, a week, a month, a couple months. And you get this feeling like you're King Kong and you can't do anything wrong. Then you get into that trade that's going to come. And you're going to hold on to it. And it's going to build up a lot of unrealized equity. That means on paper, unrealized potential. If you close a trade, you would get that, but you're not going to because partials are stupid. That's what you've been telling yourself, and you don't want to subscribe to that. And I have watched my own trades. I've watched my students' trades, and I've watched people that don't trade anything like me get real close to their objectives. And I listened and I observed and I watched them arm wrestle the public because people with more insight than them, more experience than them, simply said, why don't you just take something off here? It's struggling and you're flipping out and you're losing your mind and you're stressing out and you're all over the place. You're animated. Can't sit still and you're live streaming. That made me anxious. And I don't get anxious in the marketplace, but that made me anxious watching this person squirm over something that is such an easy remedy. You just take something off. That's trade management. That's risk management. And it's also emotional management. You have to manage the person that's pushing the buttons. And money, fear of losing, fear of judgment publicly. Listen, I'm going to call a move, probably a couple of them this year, and it's not going to work. You think I give a shit what you think if I do it wrong? I don't care. I'm going to do it more times right than I'll do it wrong, and it's okay. And I want you to understand that you're going to do it wrong, and because you don't know for certain. I'm going to tell you, the folks that took shortcuts where they're going to see the fair value gap, the shift in market structure. They're going to try to go short. And I'm telling you in the chart, that's not it. Because you didn't watch the entire thing. You didn't back test. You didn't read price. You didn't study. You didn't do any of those things. And you're trying to sell short today. Over and over and over again, wrestling, arm wrestling, because you have something to prove. Well, you're proving that you're not as disciplined as you claim to be. You're not profitable. You're not consistent. You're not precise. And your method's shit. Yin and yang ain't doing shit for you. So if you're going to wrestle with these markets, you don't invite yourself to be wrestling emotionally and psychologically while you're in the trades. So if you feel that tug of war that's affecting your focus, if you're physically talking about it, if you do those types of things, if you make any kind of physical, audible response to whatever the market's doing, that's the surest sign that you need to take something off. You have to do that. If you don't do that, you're literally putting yourself through the ringer for no reason. Because you don't know if your target's going to get hit. Just like mine wasn't hit today. I had 2 partials that came off and I had the largest portion of the trade in the book. My stops were rolled. If it came back, I told you I didn't care. $9,100, but wrong. Say that again. $9,100, and I was wrong. How many times can you afford to be wrong if you don't pay yourself? You're literally in the statistics that this industry talks about. Shitting yourself in the first 90 days. You don't need to know where the high is going to go. You don't need to know where it's going to close. You don't need to capture the full AM session move. You don't need to capture the full PM session move. You don't have to be right on your direction. You can be wrong, get in alignment and say, okay, I was wrong there. And you reverse it and do half the position size that I just took a loss on. And end up making more money than you probably would have done if it would have moved in your favor. This is what I'm talking about when many of you are getting into this industry and you don't really know what you're doing and you don't know what to expect. And you listen to these yahoos on the internet. They have no idea what they're doing. These people that can't prove that they can trade profitably, they're the one giving you advice. They're the ones telling you what you're seeing didn't happen. That's lunacy. Like, that is lunacy. Like, that is some Tom Cruise jumping on the couch shit right there. Okay? Like, these are the people you're going to listen to. Just look at this week, folks. I didn't get lucky this week. We're going to do a whole year of this. You need to think about who you're giving your time and attention to. You need to guard it. You are going to be met with so many things distracting you this year. Social media, trolls, your personal life. Watch how it happens. It always works like this. It always does. Because it's like this unseen force that doesn't want to see anybody be successful. And all you got to do is keep your nose down in the charts. Keep your ears open and listen to what I'm telling you to do. And don't do the things I tell you not to do. You need to use a stop loss. Do you have it in you to admit when you're wrong? Can you admit when you're wrong? Because you need that skill set in this industry. A lot of the hotheads, and I might sound like a hothead, I'm just passionate. But the hotheads that will tell you, don't do this, don't listen to me, don't listen to anybody but them because they're selling bullshit. They have a service. They have something to sell you. I'm not doing any of that. I'm over here outperforming them, over delivering. I'm busier than them, proving it, showing you. Got profitable students coming out of my ass, and they got something to say about why you shouldn't be here. And the response would be, buy their stuff as an alternative. I'm just reminding you, I'm doing this because I want to do this. It's free. It works. People are making money. You can find consistency in it. You will lose money like anything else, but you need to understand how to manage even winning positions. Winning trades, they have to be managed just as much as a trade that might be a losing trade, but you hold on to them too long. Now, think about this for a moment. If you've traded with live money, this is not the same as when you're trading with a demo or paper trading, you're trying to learn how to do it. If you ever traded with live funds, you're going to have this experience. Once you do it, at least a few times, you'll have this happen to you. You'll put a trade on. You'll feel good about it, or maybe you won't feel good about it. You'll just be impulsive and put the trade on because you have time and you just want to see something happen and feel like the lottery win. But you'll put the trade on, and it won't move in your favor right away. And it starts drifting down. And you know in your mind's eye that if it goes to this level, you don't want to be in that trade. But your stop loss, if you've adopted one, is maybe very close to that level that's really uncomfortable for you if you get to that point. So in reality, that should have been your stop loss where you're uncomfortable, because you don't know if the market's going to drop down there and snap into that level and go through it. So wherever that pain threshold is for you in the trade, that's where your stop loss is. But how do you manage that? Fear. Don't over leverage, but use that same stop. Because what you're doing is you're saying, I'm fundamentally wrong as a human being, because if it goes here, it's probably going to keep going. And my idea about it going higher is incorrect. And that's uncomfortable. That's worse than a stop out, because it's pride. Pride takes more than a losing trade takes in funds. It lasts longer. The pain's worse. The drawdown doesn't come back that fast from a losing series of trades because of the ego. The pride is the issue of being right, to be perceived by your peers or onlookers, detractors, supporters, whatever you want to call it, an audience, whoever you invite to watch your trade, to make it harder than it fucking has to be. It's stupid. It's madness to see what you guys want to do with yourselves. And then when you are struggling, trying to find profitability, you're coming at me to vent when you're doing it all wrong. You're out there trying to arm wrestle yourself in front of the public, and you're floundering. I don't need to do anything. You're doing it to yourselves. But if you're here to be a student and you want to learn how to do it correctly, you have to identify where you're wrong and admit that, okay, I'm wrong here. That's wisdom. That's wisdom. But you look at it as, that's a weakness. I should have known better. Who says? Who says that you should have known better? You don't know what that market's going to do. You don't know if it's going to run to your target. I don't know. That's why I have to use a stop loss. If I knew for certain, I wouldn't even bother moving my stop loss. I wouldn't use a stop loss, and I wouldn't take my partials, would I? Oh, shit. I never really thought about that. Hello. When I dog whistle a trade that's a low resistance liquidity run signature, I'm comfortable knowing that the market's going to go where I want it to go. I still have a stop loss. I'm not all that pressed to take partials or that much of them off, because I'm generally on the right side. But high resistance liquidity run signatures, you have to be mindful that they can many times come back and swipe stop losses much more frequently than a low resistance liquidity run signature. Those price runs, they don't have a whole lot of returns back for stops. They're quickly trying to run to an objective above or below the marketplace, which is the reason why I teach my students to look for those. They're very rewarding. They are quick to give you that instant gratification, and it's exhilarating. You feel like, wow, man, that thing delivered like nobody's business. Man, how fast that thing happened. That felt awesome. And you want to go right back in and do it again when you're new. You think it's going to be something just like that next. And it's not like that. There's small little surgical precision elements that leads to that. But high resistance liquidity runs, they will still go, but they go in these stair-stepping type thing. It'll go up a little bit, consolidate, drop down, reaccumulate, go up a little bit slowly, go to a new high, consolidate, drop down, run stops. Consolidate, rally up again, consolidate, drop down to an inefficiency, rally again a little bit, and then go down once more to take out stops after the inefficiency formed. That's what makes a high resistance liquidity run very frustrating. And many of you that are trying to learn my content, you're going to think that you're trading like I am. And you might think that you're in one of those trades that move real quick and it's like hot knife through butter. But in reality, you're trading a high resistance liquidity run, expecting low resistance in that move. And you're getting frustrated. Why? Because you don't know what you're doing. 2, you're over leveraged. 3, you don't have experience sitting in a trade. And you're not going to take anything off because you listen to people on social media say, don't take partials, they're stupid. When I'm showing you every day, every week, months and years, over and over and over again, me executing with the very things that I teach. Come on now. Come on. What matters more? If you're in a court, okay, if you're sitting in front of a judge and a jury, who's going to have the more damning evidence? Somebody that's bringing the receipts showing that this is what it works like. This is execution. This is the person driving, and I'm doing it. I'm doing it every fucking day. Every week, I'm showing you exactly what I taught in those videos, and it's happening like precision. But it's also delivering the same way when I say it's a high resistance liquidity run. It's performing exactly how I said this is what you don't want to be pushing hard in these types of moves. Can you make money? Yes. Can you find 5 handles in those types of moves? Yes. But you have to relax. You have to relax. And you can't push. And you sure as hell need to know the bias. You can't be selling short on a day like this over and over and over again, and adding more and trying to do a bigger position because you're arm wrestling for clout and failing. Allen, Texas, like I said you would. Why don't you just listen to me? I'm giving you the very things to help you, and you are fighting me. You're fighting me. It doesn't make any sense. It makes no sense. When you are in a trade and you feel high strung, when you feel like you want to turn your live stream off because you know your trade's about to shit the bed and you're going to lose more, number 1, you need to stop. Take some time off. 2, you're over leveraging. And 3, you need to reassess what you're doing because you are fighting real institutional order flow and you don't know it. Market profile is not going to teach you that. Point of control is fucking useless. Depth of market, all that bullshit. Heat maps, dumb bullshit. It's useless. It's all gimmick. You don't need any of that stuff. You don't need any of it. I've been trading this entire year, just doing discretionary trades with just the basic of the things that I teach on my YouTube channel. None of that was Enigma. You don't need that.